to end of day review of the FTSE 100 on the 7th of January 2015. Okay, right, bringing you an intermarket analysis view and obviously a daily wrap up as promised for 2015. I'll stop being lazy and well, it's not being lazy, it's just you don't have enough time, or there isn't enough hours in the day, given the fact that I've got two children. One's at school, the other one is currently only 2 years old, family, and obviously other commitments as well, on top of trading with regards to mentoring, and obviously I run the live analysis service where I share my day trades. So there's only so much one can do in a day. Okay, on top of that, I'm always constantly reading, learning, etc. Twitter, my website, so on and so forth. Okay, so there's only so much you can do, so I try my best as a human being, and obviously I try to keep myself fit as well. Okay, so right, where are we? Okay, so we start the day. Let's look at the fundamental outlook before I go into the technicals. Okay, so we start the day with Shanghai obviously higher overnight, which is good news. The Hang Seng higher as well, which is good news. And the Nikkei flat, which obviously isn't exactly bullish news, or not interpreted as being bullish. Okay, it's flat overnight, so that's not a good sign. Because obviously the USD JPY and the Nikkei is really the driver of US markets, and obviously in turn that drives the European markets as well. Okay, so we came into the market with regards to Grexit fears. So obviously, as you can see here, the Athens stock market did end up down on the day, although it did come off the lows. Okay, from the initial lows. So obviously we've got Grexit fears obviously in the background. That generally remains a recurring theme now, and given the fact that oil prices obviously were down as well overnight, we hit a low of 47, but obviously we've rebounded now to 48.7. currently I think we are around that region, around the 48.7, 48.6. So obviously that was a situation that we faced. Okay, so from the outset, if we look at our FTSE 100 chart, if I just bring that up for you. Okay, so from the outset we sold off, which was given the fact that oil prices obviously were down to 47. We hit gap fill, as you can see here. Gap fill was around the 6366 level, and then obviously the market bounced and went off to the races. Now, if you look at my two videos yesterday, my video on the FTSE on the US markets called for a bounce and potential move higher, provided we held a fib 75%. If you go back to your US video or the US market analysis video yesterday, you'll see, if I look at the daily chart, you can see here that the fib 75% has held. Therefore, obviously the bullish scenario stays. Remember, 75% is very, very important. I'm not going to go into why it is, but it's very important. Okay, I don't want to digress. I want to keep these videos as simple as and straightforward as possible for people looking at end of day analysis. Okay, so same thing with regards to Dow Jones as well. If I bring up a daily chart and show you there, as you can see there, we held a fib 75%, previous resistance equals support, and you can see the market held this key trend line and obviously bounced, and off we go. I'll be putting a bullish engulfing candle now, and then we'll have to assess. I'm going to do a separate US market analysis video, and then I'll discuss exactly what's happening with regards to US markets. But that's the situation that we find ourselves in. Okay, now I did explain on the daily chart as well, on the FTSE 100. On the daily chart, I expected the fib 61% to hold. Obviously we have held. We have put in a potential bullish engulfing candle with a topping tail. Again, I'm going to discuss with regards to what's going to happen with regards to that later on. Okay, so quite a considerable bounce, and that's all mainly based on the fact that oil bounced as well. Okay, right, now once that obviously occurred, we had some European data out. Okay, in the morning. Okay, so retail sales from Germany stronger than expected. Employment data out of Germany stronger than expected, so that's technically bullish. Okay. Overall, then we had consumer CPI data year on year, month on month as well. So basically, overall, we had CPI data for regards to December coming in at minus 0.2%. So again, that stirred or supported the view that the ECB will do QE, and obviously that caused for a rally. Unemployment rate in the Eurozone held steady. Okay, CPI index out of the Eurozone, or Italy, was negative again, or well 0% lower than the actual forecast. Again, that supported the thesis or argument for obviously QE. And given the fact that Germany overall the data was strong, and given the fact that we also had Chinese data out overnight as well, that came out strong. We had consumer confidence, I think it was confidence data that came out overnight out of China, that was strong. Westpac consumer sentiment over higher as well. And given the fact that Asian markets were higher generally speaking, even though the Nikkei was flat, obviously that alleviated some concerns with regards to Grexit, etc., etc. So obviously that calls for a potential rally, and that's exactly what I call for according to my analysis. Okay, so that's basically where we are. Right, bear with me. Okay, right. So that's basically where we are. Okay, right. So that's basically the scenario. Obviously, the FOMC meeting, etc. That obviously that's a different picture, all in all. And then obviously we had the ADP jobs number that came out, and that obviously fueled the rally as well, because the jobs numbers out of the US were pretty strong. Okay, overall, basically. Now. There was a situation with regards to the terrorism phase out of France, which obviously caused a potential risk-off scenario for a short while. And then obviously the stronger data out of Germany and stronger data out of the actual US obviously led the markets higher. So it's important that we concentrate on stronger data. Obviously overrided the phase of Grexit and overrided the phase of terrorism as well. Although terrorism is not something that you can ignore. Especially with regards to France, and the French economy will certainly remain under pressure. Also, there is talk, and a lot of talk now with regards to ECB doing QE and so on and so forth. Again, that's a different topic, and I don't want to expand upon that. But overall, initially we pushed higher due to stronger German data overall. Okay, and obviously weaker inflation data out of the Eurozone, which obviously adds weight to QE. So therefore, the Kool-Aid and the QE junkies obviously bought the dip. The market rallied. And obviously created a short squeeze, given the fact that you had a lot of Grexit traders that were probably short, obviously looking to cover their stops, and obviously going into FOMC meeting, etc. There'll be individuals covering their shorts anyway. Okay, because obviously Miss Yellen's about, and there's something to keep an eye out for. Okay. Okay, so that's basically where we are. Okay, with regards to that's a summation of fundamentals. Okay, so overall, with regards to fundamentals now, it's the terrorism phase that will dominate. Okay, and also the interpretation of the FOMC minutes. Again, I'm going to leave that for the US market analysis video to explain and elaborate on there. Now that the fundamentals are out of the way, okay, let's focus on the technicals. Okay, so daily chart of the FTSE 100 we have here. Yes, we've held a 61%, so that's the important factor here. We've put in a bullish engulfing candle, so that needs to be respected. Oil prices are $48.7. Potential there for oil to potentially bottom out. If I bring up a chart of crude oil and Brent crude, we'll just have a look at that with regards to what's happening there. If I look at a 60-minute chart of Brent, now this is very important here for the bulls. Okay, now just make sure you put this pattern on your charts as well. Okay. And make sure you save this pattern. Okay, I can't stress how important this pattern is, because remember the FTSE has oil running through its veins. Okay, it's all about oil. Full stop. If you map a chart of oil onto FTSE, you'll see that there's almost 100% correlation at present, and the same with the S&P 500 as well. Okay, because commodities make up a large part of the actual market itself. Now, given the fact that we've got stronger jobs data out of America today, okay, that's going to support the argument for, or is going to counter the argument of lower growth, because obviously the reason why the US markets have been down, and the reason why the market, obviously the S&P 500 dipped below the 20 or the 2000 level yesterday, was due to the weak ISM data and factory orders and so on and so forth. Okay, so those of you that obviously trade the market, you already know, you're already aware of the economic data and the reason why the markets are moving the way they are. I'm not going to be patronizing in any way, but for those of you that are obviously intermediate level potential rookies and trying to learn the market, I'll just give you an insight briefly. Basically, the US market has been falling based on basically it's no longer QE, so it's no longer bad news equals good news anymore. Okay, bad news equals bad news, because the Kool-Aid or the QE injection is no longer there. Therefore, the onus and the emphasis now is all about good news, hence the reason why the USD JPY pushes higher, and that whole trade and that whole link between USD JPY and Euro JPY forces obviously the US markets higher. Okay, so you must map the USD JPY chart onto your S&P or Dow chart or whatever, whether you're trading Russell, etc., and that in itself should be superimposed then onto the European indices as well, and obviously the Asian indices as well. Hence the reason why the Nikkei being flat overnight is not exactly a bullish sign. Now these are all things that you must learn with a good mentor, so I'd certainly encourage you to obviously find a good mentor, learn these concepts, because they are very, very important. These relationships will be absolutely vital. With regards to moving forward, okay. I do have a mentoring program for those of you that are interested. If you go to my website, I'm sure you'll find my website via my YouTube videos or my Twitter handle, and I do have a mentoring program. Now I have recently started. I should have an office in Canary Wharf soon. Okay, I have gone into agreement with an organisation that will be teaching potential students in real time. Okay, and obviously I'll be one-to-one. Hopefully I'll be in the near future. I'll be based in the Canary Wharf area, and hopefully I'll be able to trade my own account, hopefully, and obviously trade in real time and share my analysis and share my thoughts all in real time, and that will probably be the best way of teaching potential students. So that project should be starting very soon. Okay, and hopefully once I get the office and everything secured, I'll give it access to everybody, the premise and the location, etc., and then we can all get together, and hopefully 2015 should hopefully bring about an improvement in my teaching methods. Okay, so that's something that you certainly can look forward to, hopefully in 2015, and it'll be good to spend time in London, in the heart of the financial capital, obviously, and working with individuals and improving everybody's trading skills. This is something that I've been doing for 10 plus years now as an independent trader, trading for a living, and hopefully I want to certainly give as much knowledge that I've acquired and obviously gained over the years, whether it be based on my economics degree, whether it be based on my understanding and knowledge of intermarket analysis, and applying that obviously to real-time trading. Okay, right. Okay, I think I've digressed again. I need to stop digressing. I want to keep these videos short. Okay, so remember this chart. Okay, this chart of oil will be the reason why the FTSE will go higher. If this inverted head and shoulders formation, as you can see, we're in a downtrend. Okay, you can clearly see this downtrend that we're in at present. We have this falling, contracting wedge, call it whatever posh technical pattern you want. The whole concept, really, from my perspective, is it's no longer making lower lows. And whenever a chart no longer makes lower lows and makes a potential higher low, as you can see here, use your Fibonacci, you can see the pivot lower was 46.88. You take it to the neckline, as we can see now. We've held a 61% fib. Provide that 61. As you all know, 75% is the crucial area. Mr. Bulkowski, those of you that want to learn technical seriously, then make sure you visit Mr. Bulkowski's website. The website is thepatternsight.com. Let me just get this website here so I can show you. This is Mr. Bulkowski's pattern site. So patternsight.com. Visit it. The book itself is very important. He has a list of books, etc. He does various analysis on technical patterns and which patterns are successful and so on and so forth. It's an encyclopedia of knowledge, so make sure you visit it, patternsight.com. And he states on there, which is very important, whenever a market exceeds a 75% fib retracement on a lower low and lower high, and then obviously whether it's higher high and higher low, or lower lows and lower highs, whether the market's in a downtrend or uptrend. If it's in a downtrend, obviously that's it's a different scenario. If it's an uptrend, it's a different scenario. So it's very important, very important for you to realize the 75% fib is the potential turning point. So when you have a lower lows, lower highs, and the market then puts in a potential higher low and holds a 61% to 50% fib on the retracement, then obviously we have inverted head and shoulders formation, which you can see here, and the market obviously moves to the higher side. So for at present, if the 47.4 on oil must hold, then you have the bullish scenario. The bull case is certainly strong, and the markets will certainly continue as the oil will move higher. Obviously, oil moving higher will cause the FTSE 100 to move higher. Now, the only double-edged sword here, and this is something that I teach my students as well, remember, if oil is moving higher due to geopolitical fears, which obviously as is so evident, given the fact that you've got terrorism incident in Yemen today, you've a terrorist incident obviously in France today. So prayers go out to those individuals. May their souls rest in peace. Okay, with regards to that, so you can see that we find ourselves with these incidents. So now, if it is due to geopolitical fears, then the bullish scenario of oil going higher is offset by the negative scenario of obviously the uncertainty and fear regarding terrorism. Okay, and that obviously is negative for stocks because of the uncertainty. But with regards to the FTSE, because the bloodline is oil, that is very bullish for the FTSE, because obviously the oil stocks start to gain, and given the fact that FTSE is skewed heavily towards oil, as we all know what the scenario and situation that occurs. Okay, so with regards to the FTSE 100, this inverted head and shoulders pattern is very important. Put this on your chart, map it out, make sure it's on your radar. If this pattern triggers and we break above the 49 level, then we certainly have a move higher. The 46, or call it 47 up to 49, so you're looking at 51. 51, you do have a gap up here, which is very important. Okay, so you have a gap up here, so ideally it's the pivot low was 46.8 and the pivot high is 49.3, so that gives you $2.5 on the upside. So you're looking at 52. Okay, 51, 52, 53. This gap fill is around the 52.8, so certainly expect that gap fill to close. Okay, so there's an oil trade for you. And given the fact that the FOMC, now again I'm going to discuss the FOMC minutes in my US market analysis video, but for my skimming of the surface, the way in which I understand it based on my economics degree and the way in which my professors and teachers taught me to understand economics, basically the fundamentals or the conclusion from the minutes that I can read is not hawkish, it's slightly dovish. And if it's dovish, then that means obviously the dollar is going to move lower, and given the fact that commodities have an inverse relationship with the dollar, that will then obviously fuel the commodities to move higher. Given the fact that you've got uncertainty with regards to terrorism, obviously that helps oil move higher, given the threat that it poses, or these imbecile, stupid Wahhabi ideology, which as you already know, I'm totally against the Wahhabi ideology because it's been concocted in a lab somewhere. It's totally alien to any religion, regardless of what religion it is. It has, especially Islam. It has nothing to do with Islam. I'm a Muslim, I'm Orthodox, I'm Sunni, and trust me, I know. Okay, and I've studied with a lot of very, very intelligent people, classical Orthodox individuals, and the majority, 99.9%, will tell you, I mean, there's 1 billion Muslims, in excess of 1 billion Muslims in the world, and 99.99% of them will tell you that this concept of this Wahhabi ideology of killing innocent individuals randomly in barbaric acts of terror has nothing and no basis, no foundation on Islam whatsoever. Okay, unequivocally, there's no ambiguity regards this. It's very clear cut, and these individuals that are attempting to do it and perpetrating it are mentally unstable, shall we say mentally unstable, emotionally distraught, have no hope, satanic individuals. Okay, and again, there's hidden agendas behind that, and they have external forces at play, and there's war by proxy and so on and so forth. So I'm not going to go into that because I think I rant and rave on Twitter all the time with regards to that, but it's very important that people realize that this has nothing to do with Islam or any other religion as well. Okay, right. So watch out for oil. Oil will move higher. FTSE will move with regards to that. Now let's have a look at the price of Brent as well. Now that we looked at crude oil, let's have a look at Brent and see exactly where Brent is going. Okay, so Brent, look at a 60-minute chart. It will be in more or less inverse with regards to the US crude. Okay, because like I said, it's all about the inverse relationship with the US dollar, and obviously the concept of fear with regards to terrorism in France. Okay, so here we go. So as you can see here, folks, okay, so you've got this left shoulder here, you've got this head, and of course you got this right shoulder, and off we go to the races. So the pivot low here on obviously Brent crude is 49.6. you got a pivot high around the 52, so you're looking at $2.5 again, so you're looking at 54.55, and yes, you do have a gap on Brent crude as well. So that itself will be telling you a story, and the story is based on intermarket analysis that we have a potential move. As you can see here, resistance, 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 resistance. and previous support equals resistance on this trend line. Perfect technical setup for a bullish move higher. Okay, perfect. I mean, how easy can it get? Okay, I mean, technical analysis is not exactly rocket science, no matter how many times people want you to believe, and you're paying all these charlatans out there to learn how to trade the markets. Find a good mentor, people. Find a good mentor. Find somebody who trades for a living, who does this for a living, who shows you in real time. Okay, it's all about talking the talk and walking the walk. Somebody who walks the walk. Don't go out there to all these charlatans that are charging you 10,000, 5,000, ridiculous amounts of money for courses that they can't even teach. I mean, they don't even know how to draw trend lines correctly, let alone teach you how to trade. Okay, learn from individuals. That's why I do these YouTube videos, so you learn. Okay, I'm not charging you for these videos. Okay, so it's important that you try and take these videos on board, learn these technical skills, learn the fundamental skills, learn my thought process, so that you can obviously mimic that, and hopefully it improves your trading results as well. And hopefully it makes you successful traders. And really, at the end of the day, you're only as good, the teacher is only as good as a student. So if I can teach you, which I call you the students, those of you watching these videos, then hopefully you can improve. And if anything, that improves my my status quo, because I've taught you correctly. Okay, so focus on this inverted head and shoulders pattern. And I've told you with regards to 75% fib. Obviously, if that fib 75% fails and the right shoulder fails, then you know that a failed technical pattern equals an emotive move in the opposite direction. Oil will slide further and FTSE will go down with it. Okay, and again, that's a different scenario. It's important that we learn properly, and there's so many different permutations there as well. Again, it's learning on different levels. Okay, and this is something that I teach via the mentoring program. Hopefully, one lesson at a time. Okay, folks. So focus on these two patterns. These patterns will be very, very important. And also, these patterns are not only important for the FTSE, they're also important for the Aussie and the Kiwi as well, because these patterns are aligning with the Aussie and Kiwi. So if you study your Aussie and Kiwi charts, you'll see that there is a potential inverted head and shoulders or reversal pattern aligning themselves there as well. Given the fact that dollars a week, Aussie, Kiwi are commodity currencies, they'll move higher. Okay, this is all intermarket analysis. Okay, so you can cross-reference this with the currencies, cross-reference this with commodities, cross-reference this with the bond market and the equity market, and then you get a clearer picture. Okay, hence the reason why Mr. Murphy wrote his book Intermarket Analysis. Hence the reason why my mentor Anna Cooling has wrote her book with regards to three-dimensional approach to forex trading. Hopefully I have told her that she needs to put a new title with regards to that, because it doesn't really apply to intermarket analysis. And hopefully a new book is coming soon, and hopefully I'll be helping her with regards to a chapter on that. Okay, right, I've digressed again. I need to stop digressing. Okay, so let's go back to the FTSE 100 now that I've given you an insight with regards to that. Also get your sectors as well, folks. This is your pharmaceutical sector. You can see the inverted head and shoulders formation on the 60-minute chart with regards to the FTSE. The banking sector potentially making a base here on the 60-minute chart. Your oil chart as well. This is going to be absolutely crucial. We have stopped making lower lows, lower highs, and there is an unfilled gap above. Again, I don't want to go into that in too much detail. I'm trying to keep these videos as small as I can. Okay, again, let's go to the retail sector. Potential scenario there for retail sector to reverse as well. Okay, now let's go to the FTSE 100 chart again. Okay, so the volatility index, this is another important thing. This is the volatility index, and you'll get this with ProRealtime.com. So those of you that want to go onto ProRealtime.com, if you go onto their website, subscribe with them. Okay, I think I'm paying around £100 odd for my charting package, and you will get this volatility index, FTSE volatility index. And as you know, this FTSE volatility index is now coming into resistance. This is a daily chart, and resistance has been confirmed. A 60-minute chart will confirm that as well. A potential there for a HNS formation. The only concern that we have now is terrorism out of France. Once terrorism fears are alleviated, and the market generally tends to forget, because it's a goldfish, it generally tends to forget very quickly, then the markets can resume an uptrend, provided oil prices obviously trigger the inverted head and shoulders, and the FTSE will move higher. Okay, and also given the fact that the stronger US data in terms of jobs data has alleviated any growth concerns for now anyway. Okay, but again I need to discuss that on the US market analysis, and I'll explain all the potential, because remember folks, the stock market is like a chessboard. Okay, think of yourself playing chess. When you play chess against your opponent, you're looking at all the potential moves that he can make, and all the potential moves that you can make, and all the potential scenarios and outcomes and the end result. Okay, so that's exactly what we do with regards to intermarket analysis. Okay, the FTSE AIM share still remains weak, 3-bar pullback. So again, nothing really bullish there. So I won't really. So again, we need to take that into consideration when studying the FTSE 100. For now, we know that that it has put in a bullish engulfing candle, and we need further evidence with regards to 61% fib holding and for the markets to move higher. The FTSE 350 itself, let's go to the 60-minute, daily chart. And again, this hasn't put a bullish engulfing candle. It is an inside bar. So again, you can't get too excited at present. We need further evidence, and let's see how the Asian markets react overnight. And like I said, the biggest concern for now will be the terrorism phase from France. Okay, and exactly what happens with regards to that, because last time I checked, there were a few gunmen loose, those idiots, morons, imbeciles, fanatics, lunatics, extremists, Satans, that's probably the best word for them. Okay, out and loose, so the faster they get caught and eradicated, the better. Okay, with regards to the FTSE itself, FTSE 250, you have a golden cross. Okay, so again, that's potentially bullish with the 50 MA on the verge of crossing over the 200 MA. So you do have a potential move higher to the 16,270 level, potentially higher again. So that's something that we're going to keep an eye out for with regards to the market, and that's a potential bullish scenario, especially with sterling going to 1.51. Obviously, that's good for exports. Okay. That's important to understand. So German data will be the key with regards to Europe, and obviously the concerns with regards to Grexit obviously will be in the background, and also the terrorism phase as well. I mean, Grexit plus terrorism, that's not exactly a good backdrop for the markets to move higher based on fundamentals. Okay, so now let's go to a 10-minute chart of the FTSE 100. Okay, 10-minute chart. As you can see here, the market sold off initially, given the fact that oil price was lower. It sold off. Stronger retail sales, etc. Asian markets higher, market pushed higher. Oil price started to rebound, market pushed higher. Okay, and obviously weaker inflation data out of Eurozone obviously spurred or encouraged the QE traders to come on board and buy the dip, and the markets obviously moved higher given the fact that Shanghai was strong overnight. And that's all the FTSE needs. Obviously, commodities start to put in a potential base, which I've explained, the inverted head and shoulders formation, and off you go to the race, and the FTSE moves higher. We go higher back to this resistance line. Okay, so this key resistance line will be absolute crucial. 6450. We did push high up to 200 MA at 6460, so that's something that we'll watch out for. So we had a rising contracting wedge pattern. Obviously, we've broken out of that as well. Once we broke out of that, we had if you can see this, hopefully you can see this, but you can see that we had this H&S formation. So this is your head, so your left shoulder, head, and then obviously you push back, reverse, down we went. So you had a pivot high of 6460 down to the 6440 level, 20-point move, and obviously 6450. So that took you to 6420. We had this red trend line. I mean, this is absolute perfection in terms of TA. That's exactly where I went long with my subscribers, and we nailed plus 25 on the Nasdaq and plus 40 on the FTSE as we pushed higher after hours. And the FTSE is currently sitting around the 6460 level as we speak. Okay, so again, it's your technicals amalgamated with your fundamentals. Now up here, this is where you had terrorism fear. That's why I went short. Okay, and here, once the terrorism fears had all been discounted into the market, with the FTSE pulling back by 40 odd points, oil prices obviously remained afloat. The inverted head and shoulders pattern, which I've already shown you, Aussie and Kiwi, as I've already shown you or explained to you. Sorry. With regards to the Aussie and Kiwi, obviously Asian markets higher overall, and the USD JPY trade making a comeback, Euro JPY making a base, etc., etc. Okay, so overall stronger US data, and obviously that lifted us higher. So as you can see, this move here, and this key trend line is important as well, folks. Watch out for this trend line. This trend line that comes from the January 2nd connects to the pivot high at 2:30 on January the 2nd, and obviously moves lower, and that's exactly where the market found resistance. Okay. So very, very important. H&S formation, rising contracting wedge, upper trendline resistance, 200 MA resistance, horizontal resistance. It's all about accumulating your technical reasons to go short, and obviously amalgamating that with fundamentals. Okay, so what happens now? So all those individuals that are thinking, okay, where are his skills of commentary, and he's probably Blue Peter trading, which I can assure you I'm not, because my subscribers will testify to all my trades taken today. In real time. I share that on the live analysis service. For those of you who are interested, you can join the live analysis service. I do give a 1-week free trial, so trial it out. This is probably not the best time at present to be trialing the live analysis service, given the volatility and the insanity in the markets, but nevertheless, You can learn in any environment, so it's irrelevant. You can learn in any environment. So always remember that. Okay, so this is how the live analysis works. You can go to my website, market-analysis.com. If you click on the live analysis service tab, the details on how I operate, there's a YouTube video explaining how I operate. If you click on the free trial, and all you need to do is email me your mobile number, and make sure you downloaded WhatsApp, and I'll add you to the alerts via WhatsApp. Okay, so where are we now? This support line at 6406, red trend line, solid support. We have this potential symmetrical wedge pattern playing out. That's something that we need to focus on. 200 MA will be solid resistance, so 6450, 6460 is resistance. Okay, given the fact that we've got terrorism phase, Grexit phase, and obviously the interpretation of FOMC. Again, the FOMC or interpretation of FOMC will be based on the Asian markets overnight. We'll see exactly how they react, because they need to take into account the terrorism phase in Greece. Oh, sorry, in France. Okay, coupled with obviously Grexit phase as well. So 10-minute chart. All I can say for now, I'm not some sort of soothsayer. I'm not a Mystic Meg here. But all I will tell you is that you have a gap level support of 6420, 6400 will be solid support. Resistance will be 6450, 6460, solid resistance. If we break above the 6460 level, bullish. If we go below the 6420 level, go below 6400, bearish. What will cause the markets to be bearish? Oil price failing the inverted head and shoulders pattern, potential, God forbid, hopefully not. Let's just pray for peace in the world, folks. I'm sick and tired of all this terrorism and the effect it has on individuals psychologically. Let's just all live in peace. All these war companies, all these secret service agencies out there, God knows what they're trying to do. Let's just pray for peace, and let's just hope that peace is restored, and we're all from Adam and Eve, and let's just learn to respect one another. Okay, and let's live in peace together. Hopefully, if there's no more terrorism and the concerns are alleviated, then obviously that will allow the markets hopefully to move higher, and that's exactly what I'm expecting, provided there's no a bearish scenario or bearish connotation out of the Fed FOMC minutes. Again, I need to continue to read, and I'll explain and elaborate on the US market analysis video. Right, that's your 10-minute chart, and you know the support and resistance lines. Okay, 60-minute chart. Okie dokie, right, 60-minute chart, previous support equals resistance here, previous support equals resistance there. Okay, there's no key levels really to watch out for other than this. Okay, you have put a potential bottoming tail here. The 20 MA is starting to slope upwards, so potential tilt towards the bullish side. Okay, you have this trend line. Again, we have to respect that. We have a series of higher highs and higher lows. We need to respect that. If we do move higher, then watch out for the 6500 level and this red trend line. Okay, and that's obviously based on the fact that we have the inverted head and shoulders formation playing out. USD JPY trade, Euro JPY trade must move higher, and the Aussie and Kiwi must move higher in support of that as well. Okay, add in some QE talk from ECB. You know, if you get any members coming out pro or acting, giving dovish comments, and whether Germany pulses back. Now, Germany is in a predicament right now because number one, you've got terrorism phase. Germany's very afraid because a lot of left-wing parties within Germany now gaining strength and confidence. So again, that will potentially pull their arm, and they may well back off, and they may well go ahead with QE. Okay, obviously, given the fact that the economic data today. Although the counter argument is that Germany's employment data was strong, retail sales were strong, so there's no real reason for Germany to do QE. They're happy. Economically, they're doing good. There's no real concern there. Yes, the inflation data is tepid in the rest of the Eurozone, so whether or not this terrorism-related incident and whether this Grexit concern will finally, twist their arm and for them to agree, again, that's going to be a different story. So we'll have to see. But every day as it comes, okay, so one day you'll have an individual talking up QE, the next day the Germans will come out and talk down QE, and the whole market collapses and moves lower. But for now, terrorism and Grexit dominate, and that will be the theme. We'll have to see whether or not the FOMC minutes, the stronger jobs data out of America and Asia can actually overpower that and cause the bulls to move higher. At present, I'm going to stay neutral, with a slight bullish bias given the inverted head and shoulders on oil, but again, that will be dependent on the market, and the market will talk to you. Follow the market, don't superimpose your opinion and your judgment on the market. Allow the market to dictate and move with the price action. Okay, folks. So risk on, risk off, wax on.